Hello, good afternoon. It's closing trades time on ET now, and it's the last 1 hour of the trading session and the trading year, and it's panning out to be okay one because we're just around the flat line, at least from the lows of the trading session. We have managed to recover quite substantially, and it is possible that in the last 1 hour we just get a bit of a green tinge because remember the NAV adjustments etc. is something that usually plays out, so that might just happen. Let's see whether that works out or not. But for now, the broader indices have already turned green, whether you're looking at the mid cap or the small cap indices. So overall, the market breadth has improved from the lows of the trading session. In terms of the individual movers, it's Bharat Electronics which has managed to do quite well for itself in the last few minutes. Kotak Mahindra Bank was as it is outperforming. That continues to gain traction. And then you have some public sector entities, the likes of ONGC as well as Coal India doing well. On the losing side, Adani Enterprises is, after that big rally yesterday, is seeing some profit booking. And then the IT pack, so Tech Mahindra, TCS, Infosys, they continue to be in the red. Though I have to say from the lows of the trading session, IT pack has recovered meaningfully. From the broader markets, just watching out for some of the names, and the railway stocks catch attention. RITES, Ircon, RVNL, these are the names from the entire pack which are doing well. And then you have Chennai Petro, MRPL, Oil India of the world, which are also in the green. But it is the end of the year, so let's take a look back at some of the big gainers of the year as well, and which are the stocks which actually did well this year. Trent is the clear outperformer when it comes to the Nifty pack, 132% gain this year itself. Take a look at some of those big gainers, M&M, BEL, Sun Pharma, these make it to the list. On the losing side, IndusInd Bank, it's a forgetful year for that one. 40% kind of wealth erosion is what we have seen. Asian Paints, again, it's trading at 4 to 5 year lows. One of the years that perhaps Asian Paints and other FMCG companies which are giving it company would want to forget. From the broader market, Oracle Financials was up 200%, which means that the stock tripled this year. Dixon Tech, I mean, what a stupendous rally on that one. PB Fintech, BSC, RVNL, these were some of the other gainers, while on the losing side, Vodafone, and then some of these mid banks and financials, so Bandhan Bank, AU Small Finance Bank, IDFC First, Poonawalla, some of these financials, Aisha, lost out this year. Not sure if next year is going to be just a complete reversal or more of the same, but for now, we are ending the year on a better note than what we started at least today with.
Oh, yeah, absolutely. Recovered quite a fair bit. And I was, when you were just reading out how the yearly performers have been, and I was just thinking to myself that, while it may seem that Trent has sat on a good 132% gain, even for Trent, or for that matter, even for M&M, the year has been quite a bit of chop and churn. At least the last 3 months or so, Trent has significantly fallen off from that 8,000 tops thereabouts. And then from there, it's seen a gradual recovery as well coming in. I'm not sure what the year low is. We'll get in Naresh Mirani and Varun Saboo and chat in detail about trend charts, and from there then the stock has made a recovery all the way to those 7,000 plus kind of levels. In fact, I can see both of our chartists on board, so let's take it across to them. Naresh, first to you on how the day has been, and hugely volatile, recovered from the session lows, but what does it look like? How are we settling in for the week ahead?
So overall, a decent recovery from the day's low, but we still remain in that band of 23,500 to 24,000. Also, generally, we see a little bit of a NAV prop up, etc., happen on the last day of the year, the calendar year today. So for now, we see it on a fresh basis. Whenever we cross 24,000, 24,050, that would be an indication of some reversal on the index per se. So for now, we are still in a band, but we continue to see leadership only on the pharma side, because that is where we are seeing a lot of stocks make new 52-week highs and new all-time highs.
Yeah, Varun, hi, afternoon. What's your own sense on where the market is going to head? While Trent, M&M, BEL, Bharti have had a fantabulous year, I want to talk about the losers, and especially when it comes to the consumption end and a broader umbrella at that. Everything from an Asian Paints to a Nestle to Tata Consumer, they've all fallen quite a fair bit. Do you think some more pain ahead in the year to come for them, or does it seem like they could definitely bottom out anytime soon?
Hi, so thanks a lot, Edina, for inviting us again on the show, and also wish you and your viewers a very happy new year going forward. Just to mention about how we are looking at the market. So first, I'll just try to give a perspective on how we are seeing the overall Nifty and how that should perform. See, there are 5 things which we believe that drive markets, right? So one of them is corporate earnings. The other one is overall macros. then FII, DI, liquidity. These are the other two factors which we see, and the valuations ultimately. Now, if we have to keep in mind, out of these five, we are pretty much sorted in terms of the macros. I think no other country is growing at the pace at which we are growing at, and the visibility is also fine. I don't see any reason why over a period of time India will not grow at 7% plus. So that doesn't change. In terms of domestic liquidity, that remains strong. That has only been growing every single year that we have been seeing. In terms of valuations, after this correction that we have seen, things are looking pretty sorted on that front. Obviously, there are a lot of concerns getting built around how near-term earnings could be. See, we have to remember, market is not here for a quarter only. We are here for a 12-month, a 24-month, 36-month view. And that's when you really make your money. Otherwise, taking a 2-3 month view will not help. So these three factors are pretty much sorted. In terms of FII liquidity, it's very difficult to take a call. So far, they have been on the selling side, but one has to keep in mind that they have sold quite a large chunk. It's not a small number which they have sold, right? So somewhere that funnel will stop. It might be today, it might be 15 days, it might be a month, 2 months, very difficult to take a call. But we are not too much away from that to happen. In terms of corporate earnings, what we are sensing is that probably this quarter earnings could be a mixed bag. We are not saying that things look very strong in terms of earnings going forward. But yeah, I think this could be probably the bottoming out quarter. So one has to keep in mind that things could look up. So far we were in an election year. We had extreme weather conditions, monsoon being very very harsh, etc., which was impacting a lot of work on the business front. Now with everything stabilizing, probably the next quarter, not this one, the next quarter should start seeming to show pickup. When we talk about consumption, consumption when it comes to staples, I am incrementally getting very firm with this view that staples will never show you that kind of growth which it had shown somewhere between 2010 to 20. This is an extremely well penetrated category. One has to keep in mind it will always be that you'll hear that rural has picked up but urban has slowed. Then there'll be a time when urban is picking up but rural is again slowing. So this will keep happening. You are not going to see anywhere where there will be a very very sharp pickup in terms of volumes, etc., and the consumers, particularly on the staple side, because it's a very very penetrated category. You can have your the best way to go about here is the bottom up strategy. You can have one or two outliers here. In our view, Marico has been doing a pretty fair job of what we understand. I think
Sure.
that can be an outlier. So, consumers, we have that view, and paints, we
Uh-huh.
have concerns around the incremental competition which is setting in. So, if stocks don't have much downsides, upsides will be capped. So, probably would remain in the range here.
Okay, in the range, that's the word coming in. Nuresh, are you buying the dips on IT, or are you recommending people to stay away till, let's say, the mid-Jan when we'll start getting more color on the earnings?
So the longer term structure has improved. The shorter term, we've not been able to break out. So something like the Infosys has not been able to break out into new all-time highs. Tried a lot. Same is the case with TCS, made a strong recovery back to those 4,500 levels and dipped. But if you look at it, majority of the names, the IT index is now about 2021 highs. So structure is positive. So post numbers, if we see a gap down in any of these names, the large cap IT names, that would be a buy. And you don't want to be buying before the numbers because we've generally seen a lot of volatility. Even a large cap stock falls off 5-8% or sees a rally post numbers. So post numbers, you would be looking at any gap down in IT stocks should be bought into, at least the large cap ones.
Any moves on the downside on IT should be bought. But Naresh, I want to pick up from where Varun actually left. On the FMCG names specifically, considering, they've been so battered down. Having said that, the correction is only played out for 2 or 3 odd months, not beyond that. Do you sense some more pain on the charts for a Nestle, a Tata Consumer, or even for that matter, Unilever? Or do you think they're close to bottoming out?
So I think it's a cyclical change in terms of, if you look at longer term charts, many a times we've seen 6, 8, 10 years of zero returns for a lot of FMCG names. If you go back to HUL, which has been a solid compounder over the last, say, 30, 40 years. But between 2000 to 2010, the returns were zero. It was only dividends. Even now, if you look at it, 2020, the stock was at 2,300. We are at the same prices. So 4 years, 4 to 5 years now, the return could be closer to zero. And that is what could happen in a lot of these names. So the viewers, there is no need to get into FMCG unless you see there is a change happening. You look at Dabur today, the stock is at the same price where it was 6 years back. So for now, you would want another 10-15% correction, which is where you again play a bounce back, but not at current levels. So the stocks are in radar. Say your HUL goes to 2100, 2000 levels, that would be the 4-year low. You want to buy that. You see another 10-15% cut in the Godrej consumer. That is the time you buy, because we are in that cycle wherein it will get range bound. So you don't want to be buying in the first dip itself. So you would wait it out and play the bounces only, not expecting very large moves going forward. So another 10%, and yes, a lot of these names could be interesting for a bounce.
Point taken. Just taking stock of some of the other stocks in news. RVNL is the L1 bidder for almost 550 crore worth of orders. So that stock will come up for you on the screen. Central Railways and East Coast Railways is where it's bagging orders from. Lupin, two pieces of news flow. One is, of course, delay in approval coming in for Amneal's Pro Air generic. So that's a positive. And then Lupin has acquired the diabetes portfolio from Eli Lilly. So that's something to watch out for. Adani Wilmar, of course, is adjusting to that price point of 305 where the deal is happening. So just around that level coming in for Adani Wilmar. In fact, just wanted to ask you that question as well, with respect to the pharma sector, as to what the overall expectation is, Varun, because we have seen massive rally this year across the board. Sun Pharma is up, 50%, Lupin is up 80%, the index itself is up 37%. Do you expect, a repeat in 2025?
We don't think that there's going to be any material sharp rally from here. These will be earning compounders from here. So they will keep mapping the kind of earnings growth that you're going to see going forward. There were a lot of positivity getting built around the CDMO theme behind the Biosecure Act and all. So there also we have seen a very, very sharp rally in all these names, DVs, etc. I somehow believe that valuations is capturing a lot in it. It can only be earnings which they'll map. So not extremely positive in terms of any material valuation re-rate, but these are great earning compounders and they will remain going forward as well.
Okay, compounders at best. That's the take on pharma. We're going to take a very quick break, come right back. We'll continue tracking the last trading day for the calendar year on the other side. Back with closing trades right here in ET now. Recovered quite a bit of lost ground. In fact, just about trying to break into the green, and hopefully that's how we should close the year 2024. It's Apollo Hospitals, Hoodco, Idea, ABB, Kotak Bank, ONGC, and then BEL, which has had a fabulous last 1 year. That continues to push in higher, 2.5% uptick. Trent as well has been seeing quite a bit of recovery coming in from those 5,000 thereabout lows that it struck earlier this year. It's made a remarkable recovery. In fact, 5,300 thereabouts just as of August. And from there, it's been a massive recovery, just 1,000 points away actually from its all-time peak, which was 8,000 thereabouts. But let's welcome on board Avani Bhatt as well and figure out what she's making on the charts. Avani, hi, afternoon. Just two stocks for you. Trent as well as BEL, and do you think that they'll continue to show bullish moves in the year to come as well?
Yeah, good afternoon, everyone, and season's greetings to all of you and all the viewers as well. So yes, Trent, if you notice, for the last 1.5 months, it has been consolidating in a very, very narrow range without breaking the support levels. So that gives a lot of hope that this breakout should play out in the coming month for the January series, because we are seeing a lot of open interest built up in futures, as well as the options data is pretty, showing signs of buying interest around 7,200 call option for the January series. So my belief is we should see a breakout of this consolidation on the upside for the stock, and levels of around 7640 to 7,700 should be seen for the month of January.
So that's the view coming in. As far as the overall, market mood is concerned, it is some of those railway stocks as well. So Avani, wanted your sense regarding, rides, RVNL, IRCON, all of these are buzzing away. Do you see any strength in, railways or defense as stocks?
See, as of now, for both railways as well as the defense stocks, it looks more of a pullback, but they are still not out of the woods. And, they're still under the radar of another round of sell-off. So not too excited on both these sectors. A pullback rally, it may sustain or not, has to be confirmed only if it crosses the short-term moving averages. All these stocks need to cross their short-term moving averages. Otherwise, one round of another sell-off cannot be ruled out.
Okay, so another, sell-off can't be ruled out. This is just a pullback rally. What else is happening in the market at this point of time? It's pretty quiet, to be honest. I think the volumes will be on a very, very lower side. But overall, IT continues to be on the back foot today as well. What's your sense, Varun, as far as IT pack is concerned? Do you think Q3 will bring in a bit of a shock or a surprise that Street is not ready for? Or what should we expect in terms of the commentary going forward? Because the stock prices and the valuations are building up quite a bit of a positive, impact.
I totally agree with you in terms of the kind of run up which we've seen in IT. We were very bullish on the entire space for a long period of time. But at this level where the stocks are, it's not leaving too much room in terms of the multiples which they're trading at right now. So any negative surprise could lead to some correction in this space. Of the sense what we got in our pre-quarterly discussions across the IT companies, what we are sensing it's going to be a mixed bag. There will be few companies which should report decent performances. There will be some which will have some misses, but I think overall don't see any material positive or negative, any major positive or negative in this space. What our personal understanding is, if there is any correction you get in these stocks, that could be a good time to accumulate here. Probably there's a time to either go equal weight or slightly underweight on IT after the kind of run up it has seen.
Naresh, what's the sense on the charts of GHCL as well as Tata Chemicals? I mean, both the stocks are reacting to that notification coming in with respect to the soda ash price. So we saw a bit of a reaction on those stocks. Do you see further upside?
So GHCL looks more interesting on a longer term basis. The stock has been range bound between 450 to 750. 750 was the recent top back in December mid also. We saw a similar price of 730 back in August, September. And that was the high back in 2022 as well. So it's a huge consolidation for the last 2.5 years. If it sustains about 740, 750 levels, it implies it's a much bigger breakout and could slowly and steadily trend higher. So looks positive at current levels. One could start up with a smaller allocation now and add on any dips going forward. Looks like a possible breakout in the coming months. Tata Chemicals, on the other hand, has had multiple bottoms around the 1,000 mark, multiple tops around the 1,200 mark, and that has continued for the last 3 years roughly. So, and it's been a very tight range of this 200 points almost for 3 years as well as the last 3 months. So till the time we don't get beyond this range of 1,200, it could be a bounce back trade. So even now, this could bounce back to 1,150 odd levels from current prices. One could keep a stop loss below 1,030 for that trade.
Okay, point taken. So GHCL and Tata Chemicals, these are the stocks that continue to do well in the trading session. Separately, Avanti Feeds is up a solid 14% right now. Godfrey Phillips has had a stellar run as well. And Chennai Petro as well as MRPL are the other two stocks that have been doing well. In fact, we spoke with Mr. Yogesh Patil of Dolat Capital earlier in the day to get a sense as to why some of these, oil and gas companies are in focus. Of course, Gujarat Gas is negatively impacted on account of the possibility that the Morbi Ceramic Association might suspend operations for a month. So that was a bit of a negative factor for Gujarat Gas. It's moved into the green. But separately, some of the oil and gas companies have been doing well. What Yogesh told us is the fact that inventory loss is not expected this time around. Plus, the GRMs have managed to spike quite substantially, and that could be potentially the reason why we saw an up move today on the likes of Chennai Petro as well as MRPL. If we do have that soundbite, maybe we can cut across and listen to it. But in the meantime, Avani, on the charts, Chennai Petro and MRPL, any indications of a breakout, or this is also one of those cases where we should sell on rise?
Absolutely. So MRPL, we are already seeing from almost after testing the 50-day exponential moving average, some profit booking is seen during the day. Now it has slipped down below the 20-day moving average also. So this looks like a pullback. Again, not a comfortable buy at current levels. it may probably come down to close to around 142 support level. That is the area where we can look at the stock again.
Point taken, but since we're talking about the oil and gas sector, Varun, quickly come in on Reliance Industries, a stark underperformer this year. In fact, I think this is the first time in 10 years that Reliance is going to give out a negative return for the year. It's actually down 6%. First time in 10 years that stock is likely to be in the red. I mean, yeah, it's not going to make a move of 6% today, so let's call that a certainty for now. But what do you think? Will 2025 be different, and will that value unlocking finally happen for the company?
See, I honestly, it's very difficult for me to understand on what is happening in Reliance, the kind of correction we have seen. The only thing which I can attribute it to is the kind of FII flows that has been there. And it's in the larger caps that we understand, right? So probably the severity in the stock fall is only led by that. I don't see any reason why Reliance shouldn't do well going forward in 2025. All businesses are doing well. We are extremely positive on retail also, apart from telecom, Geo, which is doing well. So, and the unlocking trigger, which is always there in the name. So, I clearly see that there will be a lot of interest coming back in Reliance very soon.
Will you call that one of your top recommendations for 2025, or have you guys come out with any such list or any top recommendations?
So there are some names which we like. We have come up with a bottom-up list. How we are going about it is where we see earnings visibility being there for the next at least 1 to 2 years. The ones which we think should do very well in the near term, one is the tractor theme, where Escorts, M&M fit the bill. There is a hospital theme which we really like. Hospitals are doing exceptionally well. Of what we understand, there are a lot of hospitals expansions are breaking even within 6 to 9 months. So that's the kind of positivity we are seeing on the hospitals front. In terms of banks, I think the valuations has come to a point from where downsides to these names are extremely difficult to ascertain. And if capex has to pick up going forward, it has to be through the banks. Something like an Axis Bank stands as a very, very attractive play. One of the names in the NBFC space which is doing exceptionally well, and the stock has seen a lot of correction, is L&T Finance. We don't see any material concerns going forward. There has been a little bit of concern building around their microfinance book, which is, the kind of correction that has happened, it builds most of the negativity there. And the stock is attractive. I think this could be one of the big gainers going forward. Shriram Finance is another one which looks very attractive. So these are the names which we are liking. Two-wheelers is something which we have been liking. We still like. There's been a severe correction again in the two-wheeler space, led by probably flows. Otherwise, business has been doing very well for them. Our top pick there remains Eicher Motors, which we have been very positive on. There's a 3 to 5 year view name, which I think will keep compounding year after year, because it's all about the aspirational play, and this is the best aspirational play possible. So these are names which we are liking, and remain quite positive on the markets with a 12-month plus.
So that's the take coming in, and those are some of the top recommendations, right from an L&T Finance to some of the banking names to, of course, the tractor theme looking good. Those are some of the names that Varun is liking at this point of time. Naresh, if I had to throw the same question to you, make some top recommendations for 2025. If you had to pick out 3 stocks, where will you place your money?
So in the large caps, it would be looking at, say, one would be Reliance Industries, purely for the fact that it has corrected a lot. Second would be, again, looking at State Bank of India, which is now at a current price, looks very interesting. And third would be a bunch of, say, oil and gas names. So I would take a basket of OMCs as such, which look very interesting for the long term.
Okay, and Avani, to complete that point, 3 top recommendations from you as well?
So my topic would be the first stock that we discussed, which is Trent. So I think there's a huge upside in this particular stock. The second stock would be from the pharma space, which is Glenmark Pharma. And the third stock would be Mahanagar Gas Limited, MGL.
MGL, that's one of the top recommendations coming in. But on that note, Varun, we'll let you go. Avani and Naresh will, request you to stay back with us to help us deal with the last 30 minutes of the, trading session of this year. But as we head into that short break, here are the commentary coming in from Yogesh Patil on some of the oil and gas names, specifically MRPL and Chennai Petro.
two things what I can believe that the quarter is ending with the very positive refining margins compared to the last quarter sequential basis. Quarter second, Singapore GRM was closer to $3.6 per barrel, and now this quarter third we are ending up with the $5 per barrel. So that is one positive. Along with this, in this quarter third, we will not see any kind of inventory losses. There might be little bit inventory gains, $0.2, $0.3 per barrel. So all in all, this is a positive for the MRPL and the CPCL, which are the standalone refiners, and that they will definitely report the better set of numbers in the Q3 compared to the Q2. So that is what my view on the MRPL and the CPCL as of now.
If you like this video, then like, share and subscribe to ET Now.